points in your question. Now, but before I move on to key point, let's read the more question in detail. Describe the critically analyze the reason behind this phenomenon. Why US like this, not Japan and Germany? Focus on difference between US financial system and those of other countries. So you have to comparison between US financial system. Let me write down here. Let me write down comparison between US financial system versus others. If I say other, do not talk about UK. Other means only Japan and Germany, because UK system are similar to US system, all right, in terms of their financial market, in terms of their because UK and US is a market-based financial system, but Japan and Germany is a bank-based, all right? So you have to explain points that has been given in your lecture slides, right? What they say. Your answer should include analysis of asset structure and other feature of typical tech companies. Typical tech companies means most of tech company come from Silicon Valley. Right? And I think that point I also mentioned. Fundraising strategies, characteristics of US system that facilitated this growth. US system, as I said, that largely support the idea of probably crowdfunding, maybe any kind of startups. So let me give you some key points. So they give you some hint here. This is not the complete answer, but it will give you some ideas to so here, asset structure of internet company, lots of intangible assets. Company with small amount of tangible assets, difficult with bank financing, prefer equity financing, venture capital, issue shares. Because of these reasons, because of these reasons, US market is not bank based. I repeat, why not bank based? Because if you want to borrow money from bank, what you have to do, you have to mortgage your assets. Which assets you mortgage? Tangible assets, capital asset, land, building, plant, machinery. Tech companies, e-commerce companies, do they hold tangible assets? No. They do not need big land, big building, big manufacturing, big machine. They do not need that. Because of that reason, those internet company or tech company do not have fixed asset, tangible assets, so they may not able to mortgage their assets to bank in order to borrow money from bank. So what options they have available? They have option equity financing. So means they are involved in selling equity financial instruments. So because of that reasons, since the US market nature is a market financial instrument based market or market based structure of US economy, because of that reason they are less likely to be involved in the bank funding, right? Funding from bank. This is the one point that you have to elaborate a little bit more. So go to your slide, it's given in your slides. Second one is US financial system, Anglo-Saxon type system, capital market are better developed than, for example, in Europe systems like in Germany or probably Japan. Venture capital, which is Silicon Valley, is also better developed in US, right? So best opportunities for IPOs and so on. So in a very simple language, they are just simply saying that because of the nature, because of the opportunities that you have available in US market being investors, that opportunity you're less likely to explore in non-US market or non-Anglo-Saxon, right? So like in Japan or Euros. So these things could be covered in this topic. Let me check in case if you miss anything. Yes, so they have a better infrastructures, higher support because of the culture, because of that reason. Another reason is tech company growth rate is really high. I repeat, tech company growth rate is very high. So that's why people are encouraged to invest in tech companies. So if the people are encouraged to invest in tech companies, you can easily arrange for crowdfunding, or you would be able to find investors for your investment. But on the other hand, bank-based financial system like as Germany or Japan, so they may not have such kinds of opportunity in terms of because normally when bank financing your business, bank not looking forward for the growth of your business, because bank just need a fixed interest from you. On the other hand, if the investors, being an investor, any kinds of investors, if they are investing money in your company, they're looking for a growth. And if a tech company have a high growth, so you can easily find investor to invest in your company. So when you sell your financial instrument, equity financial instrument, you would be able to find investors. So they can easily invest money in your company. So because of that reason, yes, US financial system is better, successful comparatively European financial system. And plus in US market, you have a various types of options to sell your financial instruments, not just a limited types of options. So for example, in US, if you are a startups, you can arrange your funding through public market, through angel investors, crowdfunding. So these kinds of people will be able to support you, invest you in your, help you to raise funds and then start your idea, start working on your idea. That's it. Finished. Finished.